Hey traders, what to trade next week? In this video, we'll discuss EURUSD and WTI Crude Oil. We'll analyze the structure, the price action on these instruments, and I will share with you my predictions and trading recommendations for next week. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. Right traders, let's start with the WTI Crude Oil. We are on a daily time frame, and very important thing happened with WTI this week. The price set a new higher close. If we look left, here was our previous structure high, and you can see that the price successfully closed above that structure, and the next day we also were trading above that structure. So it looks like bullish rally on WTI continues. And I want to remind you that technically speaking, we are trading in a very strong bullish trend on WTI. And so far, the closest resistance that I see is based on that trend line. You can see that here we have a major rising trend line, and in my view, right now it is the next goal for buyers. But even though the market just violated that previous structure high to the upside, it doesn't mean that we should buy the market right now. Let's spot the zones, the areas from where it will be safe for us to buy the market. Hey traders, learn top-down analysis, structure trading, price action trading in my ebook. There I will teach you all the steps that I go through to analyze the market, to spot the trading opportunity, and to trade it. For more info, check my website. It is vasilytrader.com/ebook. Moreover, on my website you can see what is inside the book. You can see the examples of the chapters, the table of the content. Check it, you will definitely enjoy it. We are still on a daily time frame, and what I did, I zoomed in the chart. And traders, I really want you to realize that at the moment the market looks quite overbought. Look, even though we set a new structure high right here, look at this bearish candle. It looks like a doji candle, and moreover the next day we saw the gap down, yes, and a very strong rejection. It looks like the market is preparing for a local retracement, for a local pullback, and our task will be to catch the market after the completion of this retracement. So what are the zones for us to watch? The first zone to watch is right here. Look at this demand cluster. Why this demand cluster is important to us? Because look how the price reacted to that in the past. In the nearest past, many times in a row, that structure was respected. And moreover, look what I spotted right here. If we take a fib retracement tool and take our last bullish impulse, here we have a very nice confluence with the 382 retracement. So what I want you to do, I want you to patiently wait for the test of that blue area. Yes, let the price reach that first. And within that area, look for the confirmation to buy. Your confirmation will be a reversal pattern being formed on intraday timeframes. Yes, you need to see the confirmation of the strength of the structure that we spotted. And just in case if the market goes lower, the next strong zone of demand to watch is right here. Look at that structure cluster here. Yes, it is quite wide actually, and again many times in a row it was respected. So in case if this first structure support is violated to the downside, that will be the second structure to watch. And if we take our fib retracement tool again, look, right here we have a very nice, almost perfect confluence with 50% retracement and 618 retracement. So again, that zone looks very important. And let me in brief show you why I think that the market is overbought based on the intraday time frame analysis. I'm on a 4-hour time frame, and here, look, the price was steadily growing within this rising wedge pattern, and you can see that the wedge's support was broken to the downside with the gap. Yes, look at this gap right here. And then you can see that here the price formed a very cute double top formation with a low high, and the neckline of this double top was broken to the downside as well. So I'm not shorting here, traders. I want you to remember that if we short the market from this point, we will go against the trend, against the sharp bullish trend, and of course it is too risky. It is better for us to follow the trend, yes, and these are two zones for us to watch. Alright, so now let's talk about euro dollar. And even though this week was quite bearish for euro dollar, I still remain very bullish, and I expect a bullish continuation of the pair, and moreover with my students we even bought euro dollar. Let me try to explain to you why. The first thing is that the price violated this major falling trend line to the upside. Yes, here we got a very strong trend line, and the price violated that. We closed above that on a daily. You may ask, Vasily, the price right now is trading below that trend line. Does it mean that here we have a fake out? I don't know. From a current perspective, it is not clear. What is clear for us is the fact that recently the price violated this strong supply cluster to the upside. The price violated that. And here, even though the price is trading below that supply cluster at the moment, I want you to realize that here the price keeps setting the high lows. And if we draw a trend line based on this high lows, yes, look, here we have a very peculiar rising trend line. And at the moment, the price is approaching that. And a bullish continuation is expected from entire area based on that major falling trend line, based on this rising trend line, and based on that broken supply zone. Yes, that is our demand zone. And from that entire zone, a bullish continuation is expected. And now the price is simply approaching its lower boundary. So from a current perspective, next week I will expect a bullish movement at least to retest our current structure high. Yes, that point. And then potentially go even higher to that resistance. Yes, if you agree with me, if you believe that euro dollar looks bullish, you can buy the market from that trend line and set your stop simply below that. Yes, it will make your position safe. But now let's discuss a bearish scenario. Alright, traders, and what I did right here, I took away all our drawings, and let me try to explain to you why euro dollar looks very bearish to many market participants. First of all, the market is trading in a global bearish trend. Yes, that is the fact. And once that structure low was reached, we started a correctional movement. The market started to correct itself. And the market started to grow within a rising parallel channel. Yes, I hope you see this channel. And from such a perspective, we have a bearish flag pattern right here. By the way, traders, if you want to learn how to trade a flag formation, I recorded a big video about flags. My entire trading strategy is explained there, so watch it. And you can see that right now the price is stuck within this channel. And of course, the breakout, a bearish violation of the flags support will be a very strong bearish signal. Yes, so in case if next week we close below the support of the flag, yes, a bearish continuation to current structure low will be expected. But remember, while the market is trading within the flag, it still remains bullish. You know, the flag support is still support, yes, and the market can easily go higher and only then break the flag. So remember that the flag formation is very conditional trading setup, yes, and it is tradable only after a breakout. Alright, traders, thank you so much for watching, and let me know in the comment section what do you expect from WTI crude oil and euro dollar next week. Also, if you want to learn how to trade, if you want to learn my trading strategy, don't forget to check my ebook, the link in the description below. Please like this video, subscribe to my YouTube channel. I will see you next week.